Welcome, everyone. It's Angelo Robles, host of the Angelo Robles podcast and the founder at Family Office Association. Really excited about today, although the topic probably probably shouldn't say really excited about the topic because a lot of it is going to be very challenging. And that is going to be the Russia-Ukraine war, the economic and investment outlook. And we're going to go very deep, cover a lot of different things. I've been looking to have our special guest on for a long time, and really the timing just happened to work out. And who is that special guest? None other than the legend himself. That would be John Mauldin, author. Yes, you are, John. Stop being so modest.
Oh, just use the word brilliant and let's just move on.
Of Mauldin Economics. On that note, let's get right to it. A few, I guess, obvious developments for the last 3 weeks. Well, we have a war, Russia and the Ukraine. We already have challenges with 7.9% inflationary rates here in the US. I believe definitely going into the double digits. I actually think it's there now, but the government CPI is not something I really rely on, but that number should move up as well. We look at commodity prices, energy. We're heading into a real challenging time, I believe, of food cost and supply chain disruptions. John, what is this war doing to the economic outlook for Americans and really investors overall?
Well, let's drop back and take kind of a major view. I mean, this last week I wrote in my letter, we're going to see a recession. It'll be a global recession. Okay, well, I think I counted up, and I've lived through 8 recessions as an adult. So these are things you get through. And by the way, for those people who wonder why I keep looking over my shoulder is this big honking screen that I can see Angelo in, and I'm looking at the little bitty, 2-inch by 2-inch Angelo there and straight into my computer. And I haven't quite figured out how to marry the two, but one day some guy will figure it out. Anyway, let's look at the major changes that happen that are much longer term and have implications for the way we're going to organize for the next 10 years, way beyond after this war is done, way beyond all this other stuff, the recession's over, whatever. First of all, Europe and the US weaponized the financial system. That is hard to get your hand around. Your country, 37A, sitting out somewhere, you've got your central bank reserves, you're, comfortable with, sitting at, some of the ECB, some in this bank, some in that bank, and all of a sudden, you don't have them anymore. Or there's the potential for you not to have them anymore. I mean, if you don't play by the rules-based order, your assets aren't your assets. We're going to weaponize it. And by the way, we're going to take the money from your citizens. And for some strange reason, we're going to cancel Anna Karenina. I can't figure out why you cancel classic shows and but nonetheless, we've weaponized that, and that changes things for a lot of countries, China in particular. China looks at it and goes, we're not ready for that. And somebody's, it keeps on, well, China and Russia can trade with each other. They've got their own little Swiss system. What the amount of money they put through their trading system, their SWIFT, their whatever. The SWIFT system does that in a day, a half a day. I mean, the difference in the sizes is just staggering. There are countries that now look at it. I mean, if it doesn't change North Korea, number one, nobody cares about them if they didn't have nukes, but they weren't getting any money anyway. It is but working with Russia now has implications. And you've got to sit and say, okay, how do I want to play out with this? Now, if India trades with Russia, they're not going to have their central bank assets seized simply for trading with them, but it starts working into how do you want to play this game? Whose side do you want to be on? And so that weaponization of the financial system and this in your libertarian framework, the shocking to me move that Canada did, saying, you donated to these truckers. We don't think the truckers are a good idea. We're going to take your money. We're going to freeze your accounts. We're going to cut you out of the insurance run. Really? You can do that? I mean, I had friends of mine who, they donated a couple $100 to the truckers. Okay. And these are well-known. If I drop their names, you'd know them. And then they started looking around and going, are we going to get a bank account that would be into the 7 figures? Are we going to get them frozen? Didn't happen. But for a country that is a liberal democracy like Canada to say, yeah, you do something we don't like, we can take your cash. Put countries along a spectrum, there have got to be people sitting in those countries worrying. Furthermore, Switzerland, how many hundreds of years of neutrality have they had being the world's banker? And they said, yeah, this time we're going to go along. Putin managed to unite NATO, which 30 years of US presidents haven't been able to do, get Finland and Sweden to consider joining NATO, which I'm not sure I want Finland joining NATO, but that's okay. I don't get paid for that observation. But Switzerland, that's a big deal. That's a big deal. So now, if you're a rich man in a country that could be a pariah state, where do you put your money? These have implications for a long time, way past this. Now, we come to this week of the sanctions. We have weaponized commodities and energy and food. That's a big deal. That changes the whole geopolitical connections that we've had. Energy was supposed to be fungible. Food was supposed to be fungible. And ultimately it will be, but we don't have the supply chains set up yet to back roads. And it's going to cost Russia something to set those supply chains up, and they're going to get less. They're going to be taking probably not small haircuts to move their energy and food around. So those are big deals. In the short term, we've just gone through COVID, and we saw how that just upset the world. By the way, this last week, we're watching infections, mostly Omicron, beginning to tick up relatively seriously, 20-30%, a lot all over Europe, though the ICU and hospitalizations are not up nearly as high. Just once again, talking to the level of the infection of how bad the virus is. But that supply, we saw what happens with supply chain there. We're now screwing up with supply chains because of the Russia, Europe, the world. China just shut Shenzhen down. That's their Silicon Valley. That's 30 million people. I mean, good grief. That's losing Shenzhen, honestly, to the world is probably more. I mean, this is just off the top of my head, but to the tech world, to the product world, to the non-energy world, losing Shenzhen is probably as important as losing Russia. That's a big deal. Now, it won't be for, we're not going to be, it's going to be not, they're not going to be locked down for 6 months. But it's, again, more supply chain problems. That's what's going to tip us over into recession. We were already at stall speed. We were already at less than 1% GDP for the first quarter. Could we technically be in a recession first quarter? Probably, if you count it about month by month in March, we certainly would be. So, I mean, then you get the ramifications of what happens when you have recessions. Well, recessions are by definition deflationary. That is going to actually help on the inflation front, except that we have the supply chain issues, and recessions don't fix supply chain issues, they crush demand. So that's my rant and ramble there. And I can see you, Angelo, wanting to get a word or two in edgewise. So
no, I'm enjoying. You took my question and ran with it. You actually answered about 3 questions that I was going to have upcoming. So let's dive into what you're saying. We're already in pretty bad shape for a variety of reasons: massive deficits, COVID, so many different challenges. Now we're adding a war with a country that has 6,000 nuclear weapons. We're alienating them. We're maybe driving them to a closer relationship with China. You're complicating matters by throwing India into the mix. You're showcasing the fact that is our money really our money? If governments could decide, if they don't like you, that they could freeze it in various bank accounts, or I will even say crypto exchanges, unless you have it in your own wallet. We'll get to some of that a little bit later. And then coupled with that, as if that wasn't bad enough, you have the issue with Ukraine and Russia producing 2 of the 3 largest producers of wheat. So we have supply chain issues, food issues, oil issues, mainly with Russia. We're in a whole heap of a mess. How could this not be a recession that may be one of the worst that we've seen? Could it lead to a depression?
Well, if your standard for a depression is the 30s, then I would say no. Remember, prior to the 30s, they called any recession, they'd call it a depression. So a recession, you know, and you'd have crashes and all that type of thing. I'm actually a proponent of central banks, but kind of under what's known as the Bagehot rule. For those who have not heard of Bagehot, it was he and his father-in-law founded The Economist. He wrote a book on central banking. It was early 1800s in England. His name is spelled Bagehot, and the English look at that, what you might think of as Bagehot, and they pronounce it Bagehot. But Bagehot's rule was that the role of a central bank was to lend money into a crisis against solid credit at high rates. So you want a central bank being there when there's a liquidity crisis and a crash. Other than that, thank you, go back, sit over the corner. I don't want them setting interest rates. I don't want them trying to be responsible for employment. I want to make their responsibilities should be to maintain buying power. I'm not comfortable with a 2% target of inflation. 1% is high enough. Thank you very much. I don't want my buying power, my money, especially as we're coming up with more and more ways to get us to live longer. I don't want my buying power to be eroded. So now I will push back on one thing. You said we're at war. No, we're not. Ukraine and Russia are at war. NATO is providing, maybe if you want to call it a proxy war, NATO is providing stingers and what's called in-laws, the anti-tank weapons and other things like that to what will eventually be partisans. I mean, I'm assuming that eventually Russia will take Kiev and some of the eastern cities. I don't know how far they get into the west. Ironically, Russia is calling up another 150,000 conscripts. I mean, you know, these are 18, 19-year-old boys, and what are you going to do with them? They don't have any training. That's one of the reasons that they're bogged down today. So the U.S. is not at war. Putin is the wild card because he's not acting rationally, but he was getting terrible information. He's lost 3 generals on the front line, and he's fired 8. You know how many generals the U.S. lost since the Vietnam War in the front lines?
It may be 0.
Actually, it's 2. We lost 1 in Vietnam, and we lost 1 in the Pentagon on 9/11.
Wow. Mm-hmm.
That was it. That was the only general that we lost in combat action, and they've had 3 gone in a major general. I mean, these are, and that's because the generals are having to go to the front line to figure out what is going on. Why aren't we moving here? And you know, a sniper looks through his scope and says, "Oh, there's a star. I think I'll take that." I mean, if I was a general, I wouldn't be wearing a star on my shoulder on the front lines.
I mean, if we are obviously a major part of NATO and NATO's now banding together to help the Ukraine, then Russia, Putin, may look at that as an act of war. And again, I go back to—
Well, he calls it an act of war. He calls what we've done to their central bank an act of war. The simple fact is, if he threw a nuke somewhere, his country's a cinder. I mean, in fact, I don't think his generals would let him do it. I mean, pick a president for the last 12 years. He wakes up one morning and says, "I think I want to nuke somebody. I'm pissed off. I'm angry." You think their generals in the U.S. would actually do that? At some point, they'd pick up the phone and call the vice president and a few of the secretaries of whatever and say, "Guys, we got a problem here. This guy wants to nuke country X." I mean, and once you start down that line, it's not anything you want to do. I mean, I'm not saying it's not impossible. I don't want to jinx us here, but I don't think it'll scale up to that. Right now, Putin is very angry because he's demonstrated to the world that the Russian military might that we thought they had is pretty third worldish. I mean, they're randomly shelling cities. They have no guard. The missiles they threw into Western Ukraine, they weren't targeted. They were just randomly thrown out, kind of aimed and let go. I mean, it's third world military operations that they really thought they were going to roll into Kiev within 48 to 72 hours. And that was what he was told. He heard what he wanted to hear and disregarded the rest. And it hasn't happened. And that's what makes him a little bit dangerous in that he doesn't have a pullback position. He can't say, "Okay, I'm sorry, we're going to pull it back and we'll pay some reparations." Taking 150,000, maybe 140,000 now soldiers back into Russia, less than 10,000 body bags, and saying, "Oh, here's what we did," and they go home and tell their mamas, "Here's what we did." That doesn't go over well. He can't retreat on that and survive.
No. He's not going to allow that to happen. It seems to be inevitable to me, unless, and I know we're probably getting a little more political than economics and finance, but it does kind of play into the convo, unless Ukraine agrees per their constitution by adding it in, not to be a part of NATO. And we'll see how that evolves.
Well,
John,
that to me, by the way, when Zelensky said, well, you know, we'll put NATO membership on the table, we'll take it off, whatever. And I'm going, okay, you're using a bargaining chip that you don't have, because you were never getting into NATO. I mean, first of all, there's an actual rule that says you cannot become a member of NATO if you have contested territory with another in your territory, because that by definition means that it trigger a threat. So like Georgia with Ossetia, some of the other groups, they're not getting into NATO. So I mean, Zelensky bargaining with that is like, okay, I'm going to give you something I don't that I know I'm never going to get if that's what you want. But what Putin wants is a Ukrainian puppet. And I don't think the people of Ukraine are going to do that short of a military dictatorship. And you're not going to get a Ukrainian military to run a military dictatorship that is subservient to Russia. You would have to do it as a Russian, and you're going to need a lot more than 150,000 troops. I mean, we couldn't do that in Iraq with 150, 200,000 American trained troops with the best supplied military in the world. And you think he could do that in Ukraine? Nah, not happening. So he's stuck. I don't know how he gets out of this. I mean, he can escalate it, I guess, but I mean, to me, we just have to do things that don't really cross a red line. I mean, don't do things like people keep saying we should enforce a no-fly zone. Well, we can't do that. To enforce a no-fly zone means that we would be shooting missiles into Belarus and Russia. Well, that's clearly provocative. So you can't have a no-fly zone. The only way you have a no-fly zone is you give the Ukrainian Stinger missiles and say, you figure out how to do that.
And I mean, this still brings up the issue of the other things I noted: rising gas prices, global conflict, banks confiscating, driving, I would assume, Russia somewhat, could I say, into the hands of China. And then you brought India into the mix. That would really complicate matters. May they realize that they don't need the US, they don't need the US dollar. And now we're creating a power that could be a major threat, let's call it broadly to NATO, the US and aspects of the EU.
I'm going to push
playing
back
into
on
China's grand plan.
I'm going to push back on you,
Okay.
Peter.
Yeah, Peter Schiff is a mutual friend of all of us, by the way.
Yeah. but that was sounding a little Peterish, and
Peter's right about that.
No, he's not.
Tell me why.
Okay. First of all, there wasn't this much difference between Russia and China anyway. Russia was already their lapdog. Number one. Number two, China can pay for the oil with rubles and the wheat and whatever they get, and then Russia will buy stuff that they need with the rubles. That's fine. That's internal trade. They weren't using dollars for that anyway. Now here's what's going to happen. Before all of this started, Europe was buying its oil from Russia, and it was paying mostly in euros, not in dollars, mostly in euros. Those euros came back and bought all sorts of stuff in Europe. Now, Europe is going to have to buy that oil from Middle East, US, Brazil, whatever. That's going to require dollars. because, you know, and that is, it's actually, I think, going to drive make the dollar even stronger. I mean, we're a long way from China becoming a world reserve currency. I mean, really, Angelo, you're gonna hold rubles in your account and feel comfortable about that? Probably not. If you're Brazil, do you hold 5% of your account in rubles because that's what you're buying back and forth? Yeah, that makes sense. Or you, I'm not rubles, but yuan. Yeah, I mean, it would make sense for me for the US to hold yuan in some of our bank accounts because stuff goes back and forth. I mean, it's just the level of trade that you have. But we're not pushing Russia into China. They were already there. Now we've fast forwarded it to it. Remember how when COVID came along and how things didn't so much change as they accelerated. Things that, I mean, I remember talking to Richard Fisher, the former Dallas Fed chair. He was on the board of PepsiCo. And this was a year into the COVID thing. And he says, John, every transformative transition idea that we had at PepsiCo for 5 years has already been pulled forward. We've already done it. I mean, it just goes, this is what we got to do. We were going to plan to move this supply chain here, and we were going to buy this, and all of those things got done. And now we're restructuring the world, and we're going to have to reshape everything, and it's going to happen really fast because that's what entrepreneurs do. At the end of the day, this isn't about governments. This is about businesses and entrepreneurs going, damn, I got to have this widget, and I can't get this widget from here anymore, so I'm going to have to find someplace else. Well, that widget's going to cost me more. If I don't have this widget, I'm out of business. So I've got to go find that widget. How can I do that? Where can I do it? I can get on a plane, put somebody, you know, whatever I got to do. And there's 1 million businessmen around the world and women are sitting around the world going, how do I find my widget? And that's what makes it work. And there's 1 million people going, well, hey, I'm selling widgets and I no longer have to compete with Russia or China, you know, or whatever. I can sell that widget and I can make more money for my widget than I've ever made before. This is cool. I mean, it's just this massive entrepreneurial Adam Smith invisible hand thing. I mean, it's actually going to move things. I think we're going to be surprised at how fast things change in terms of the, you know, taking a decade-long view. Is if you're taking a 90-day long view, it's going to seem slow as molasses. And it's going to be disruptive and prices are going to go higher and stuff's not going to show up on the shelves. I mean, where are we going to get neon? 60% of it's made in one company in the coast of Ukraine. I haven't heard anything about them blowing that building up, thank God. At some point, chip manufacturers all up and down, I mean, China, they all need neon. Evidently, it's part of the, when they do their masks and stuff. And there's just not that many. I mean, we could make neon in the US, okay? It's just a plant, okay? Expensive. Evidently, it's not something that's ecologically that you want in your backyard. I don't know why it's in Ukraine, but it's there. And there's some other places you can get it, but you can't, there's like 4 months worth of supply of neon in the world right now. And if we don't come up with something, it's going to be harder to get chips. And we're already seeing cars that are I mean, the number of cars that are stalled waiting for chips increases every week. By the way, Apple, Foxconn, their phones are made in Shenzhen, which is now shut down.
Right.
I mean, it's.
I mean, like I'm saying, there's a world of hurt. I'm probably more the Dr. Doom, I guess, in this scenario. I don't think Ukraine will exist as we have known it. And you look at, I mean,
I'm not going to argue with that. I mean, I don't know what it looks like in 6 months, 9 months, 12 months. I mean, I really don't. I'm staggered that every morning we wake up and Zelensky's still there, walking around, going to hospitals, putting out stuff. You know, and one of the website guys I follow on my website. By the way, there's a guy on for all you information junkies about Ukraine. There's an account called Noah Smith, and I don't know what the at is, but he has a list of, here's my 30 sources for your information on Ukraine. And then boom, you get them, and so you're getting your information. But I have one guy now look at every morning, and he says, "Here's the situation for Kiev. We're still here," and then it's a 10 or 15 piece thread of what's happening today. So it's good, but I'm amazed that guy's still sending stuff out. I mean, I look at it when I wake up in the morning and I'm going, yay, the guy, he survived one more day.
I mean, I could look a little more negatively and say, what's going to happen to Moldova? How about the Baltics? Well, they're NATO. But how about the fact that Russia gas pipelines they control 2 gas pipelines that exclusively provide that to Turkey and Germany. And we've heard more about that the last week or so. I mean, make me feel better, sure, but I'm looking at this. This is really bad.
Well, Coach, I'm not sweetness and light here. This is really bad. And this comes from 30 years of Germany trusting Russia to be their energy source. Oops. And we have a problem in that, I mean, they're going to have to get their gas from Qatar. To some extent, we could send it some from the US. We have an awful lot of gas. If Biden, and I know that this will be offensive to some people, but Biden says we're not doing anything. We're not holding anything up. That's just not true. There's 900 permits that get held up. Go in and do the research on it. I mean, they're slow playing everything. And the problem is the whole ESG movement has made people reluctant to invest in oil and gas. So, and when the CEO of Pioneer says, my shareholders want me to return money back more than they want me to drill, it just speaks something to the zeitgeist that we're in. I've spent 40 years in Texas, all my life in Texas, but 40 years as an adult investor. I've never put one penny in an oil and gas well. When everybody's running around, I've got all my friends who are in it. I've never bought oil and gas stock. I'm in the middle of it. It's just too boom bust for me. And I will tell you that right now, today, I have good friends that are semi-retired from oil and gas looking at another friend's, he drills oil. He's a small independent. He does partnerships. And he's been trying to get me to invest for 8 or 9 years. We're friends. He was one of the owners of the Yankees. And every 6 months he'd call and say, John, you should have invested in that last deal. We're compounding at 30%. You know, it's good times, bad times. I will tell you right now, I'm looking very seriously at putting my money and client money into drilling multiple wells in multiple basins. So you're not just one well, but you're stacked over a bunch of them, because I'm not sure we're going to be boom bust here. I think we're going to be boom, 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 boom. And then, 3-4 years out, maybe we get a bust, but you can make a lot of money in 3 or 4 years. It's going to take a while to change the infrastructure. I mean, all of that gas that's in Western and Northern on oil and everything, that Russia, China can take it. India can, I mean, they can take it. There's just no pipelines there. There's no infrastructure to get it there.
Yeah,
I
no
mean,
surprise.
Huh?
Yeah, no surprise there that we could do those things, like you said, relative to climate change, ESG. We're not energy independent yet. And all these things, I get it, they're worthy of consideration. They are not going to have a massive impact in the way that we're describing, probably for decades to come. We have issues that we need to address now, major issues. And that's probably, we're both going to get in trouble on this next question, John, but let's.
I get in trouble all the time, so.
Who cares about YouTube algorithms anyway? Competence is deterrence. Do we have the right political leadership in the US now? Since we're the world leader, everyone looks at us. We mention the whole world of hurt that we're in. Maybe I'm putting it more of a doomsday than you are. But do we have the right leadership in place to lead us out of this mess and not have nuclear war on top of it?
Well, you asked 2 questions. The answer is, I don't think this leadership will lead us into nuclear war. I mean, that's not what they're doing. The president is as good as his staff, and I'm not as confident in his staff as I could be. And just let me say, there were times when I would say about Trump, not very confident about his staff. But I do think that there's enough of a consensus there that it'll keep us from getting too far out from the white lines and getting into the ditch. I would prefer, for once, the safety of consensus within NATO and other sources to keep us inside the white lines. I don't want the US making unilateral decisions. We don't seem to be very good at that the last year or so.
If the US stock market and housing market went down by, well, let's 50% and stayed down, what would happen to the US economy? I'm afraid to ask, but let me the part 2 of that. Would it differ from the economic devastation currently seen in Russia due to the sanctions?
Different puppies altogether. The sanctions are removing Russian access to products, sources, food, experiences. I mean, I read Russia this morning. Russia is now legalized hacking intellectual property, like music and pirating software. All of that stuff. Go figure. Like they weren't doing it anyway. Could the market go down 40% in a recession? Absolutely. That's pretty much the average, a little bit less than that. Will the recession eventually be over? Yes. The problem that the Fed has now is I was saying 15 months ago, man, time flies when you're having fun. I said the Fed needed to start raising rates and reducing QE. They've made the policy, they've already made the policy mistake. Policy mistakes lead to recessions. They made the policy mistake 15 months ago. And now they're having to raise rates into a recession. And they're raising rates into an inflationary recession that is not going to have as much effect because they can't affect supply chain, energy prospects, agriculture to some extent, to a great extent around the world. It's global markets. That's why it's going to be a global recession. We're going to see demand crushed. And so how bad does it get? I don't know. How fast can businesses react? It may, one of the mitigating things is normally you see high unemployment in recessions, but we've already got a tight labor market. So we're going into this recession with a tight labor market, with people still looking and offering more jobs than there are people in the market to take them. So we may not get back to the 8, 9, 10% unemployment numbers that we saw in the Great Recession or in '82. It's too difficult to say. We've got a boomer generation that's retiring, and they're taking this opportunity to retire.
John, do you think the market will go down by 40% or more this year?
I think there's a very real chance. I mean, me making a market call is I mean, that's spitting in the wind, but I don't think we know what's going to happen to the markets. But if you look at recessions in general, 40% would be the number you'd pull out of the air. So I would say that it's as likely as not it'll be down 40%, but lots of stocks are already down 40%. We've in a lot of places.
Yes,
we've already seen a stepped bear market. What's holding it up is the big names, the big market caps. So indexes like the S&P are misleading to some degree because they're really reflecting the top 10 stocks.
I mean, let's jump into a little bit of some of that. So we have stocks down, bonds down, crypto down. It's been a damn shitty year. And I'm complaining that I'm not getting anything in cash. And then I have whatever, 7.5, 7.9% inflation. So I'm losing 8%. Am I benefiting losing 8%, having it in cash versus losing 15, 20, 30% or more in some of the other assets that I noted? Or am I being very short-sighted?
No, I mean, you're losing buying power, but you'd be losing 15, 20% on your say on your other assets and still be losing buying power. So it's frustrating to me because I've been a big fan. We put our clients in hedge funds and big hedge funds, you know, a lot of private credit, a lot of trading strategies. We're not long only money managers. We may be long at times. We may be. There have been times in the past few years we've been very long, but that's because that's what the traders are doing. They're long. We don't generally put money in long only mandates. But we did a lot of private credit, and you can get in private credit 6, 8, 9%. If you're willing to move out to the curve a little bit, you can get 11 or 12 on the risk curve. Well, if I've got what I think is a solid, safe private credit that's paying me 6.5%, 7%, I'm not worried about getting that, but I'm still losing buying power. Yes. A year ago, that 6% was looked really good against the less than 1% in bonds.
I mean, then you have, and my audience is tired of me saying this, but my audience running family office association is the super rich. they're doing things like buying sports teams, buying art, wanting to buy more stocks in crypto, buying homes in Malibu, homes in London. In other words, really, their inflation 7.9%. How about it's probably closer to 15, 20, or 25%? When I tell them or their CIOs that them getting 12% a year, they're probably still losing purchasing power. They don't want to hear me say that.
Well, I mean, people do with their money what they want to do. If you really want to see inflation, come here to Puerto Rico and try to buy a home.
Yes, skyrocketed.
I mean, honest to goodness, I live in a very comfortable home. It's an upscale neighborhood. Arguably the best in Puerto Rico. Mm-hmm. And all the crypto guys and all hedge funds, they're all wanting to move in here. And it was 8 years ago, it was a Puerto Rican enclave. Now it's, 40, 50% gringo or whatever. But it's for kids. And if you've got kids and families, it's a great school here. But my home that I bought 3.5 years ago, I negotiated for the price. It took me a little while to actually buy it. They tell me it's up 3x.
Yes.
I mean, I'm watching homes sell for 3x here over 3 years. I literally could not afford to live in my neighborhood if I came in today. I'd have to find another neighborhood in Puerto Rico. But homes all over are this is where you find real inflation. Now,
yes,
I'm not going to sell my home. Some people say, why don't you sell it? Well, A, I'd have nowhere to move, and B, my wife would divorce me. Those are both bad outcomes.
Very bad outcomes, I might add, Sean.
Just a second, I'm going to turn my air conditioning on here. I'm sweating.
I think John's making fun of that I'm in New England where I'm turning up my heat on. So the opposite of what John's doing. And I do have an affinity for Puerto Rico, and one day I may be there.
It is wonderful to live in paradise, and I invite all of your family offices to come down. They should spend a couple, 2 or 3 days at the Ritz-Carlton, at the Dorado Beach Ritz-Carlton. Without being sexist, all you have to do is show your wife to the spa and she'll love you forever. It is the greatest spa in the world.
It's a great spa.
It's great golf courses, gym.
True. John, you're quite the spokesman for Puerto Rico.
Well, it's wonderful, and the tax rate's not bad.
Yeah, for stateside Americans, it's. I think my audience knows by now. It's a hell of a good deal. Let's put it at that. And we've covered deep dives into Puerto Rico. I've interviewed some significant, not just investors and people like yourself, but political thought leaders relative to the politics and the issues with the tax benefits. So we're actually probably due to cover that again. Let's talk a little bit about rate hikes. So earlier in the year, I would have thought maybe we're in for 6 or 7 of them. And I didn't know how much, but I was very concerned. Right now, with what's going on around the world, I don't know, unless it's already baked in. Do you think we're going to have 6 or 7 rate hikes this year in the US?
I don't know, 6 or 7. I think 4 would be my pivot number. If you said 3, I'd take the over. If you said 5, I might take the under. I think what Powell, what he should do, and I'm going to write in my letter this next week, because now the next few letters I'm obligated to talk about the implications of a recession. I think what he has to do is to give the appearance of leaning into inflation. He raises rates to 1%, and then he starts winding down the balance sheet. I don't think if the meeting this week, if they start winding the balance sheet down, they should do it very gently. But what you don't want to do is have a 2 variable experiment. I criticize them for raising rates and decreasing the balance sheet when they did it. One way of saying is you got 2 variables. We don't know which one. If something bad happens, we don't know which one to blame. So I think they should be very light, very careful on the balance sheet, but raise it to 1%, then get aggressive on the balance sheet. Nothing breaks. the the problem is, if you're Powell, you don't want your legacy to be Arthur Burns. I mean,
Probably not.
You just, that's just, you know, you can't be the guy that allowed inflation to, you know, destroy the American economy. He's going to have to fight that before we can get the Powell put. And that's why the market could go down 40%, because if he starts reducing the balance sheet too fast while he's raising rates, that could create problems. I mean, everybody's seen the charts, the correlation between QE, whatever this number is, 5, 6, you know, that started March 23rd in 2020. The correlation between QE and the market is, you know, like 90%. So you start taking that off, and you think that won't have an effect. Well, we're going to find out, but I have serious doubts that will have no effect. Powell's in a very difficult position, but it's one he put himself into by not raising rates and reducing his balance sheet earlier. He's now painted himself into a corner, and he has to fight inflation. If he doesn't fight inflation, he becomes Arthur Burns, and the U.S. will end up having a 1974, 1977 recession, 78, I think it was, with high inflation. So, I mean, you get the, you know, you get the misery.
Wow, that's a double win.
It's a double win. So you might as well just go ahead and let's take out inflation. Let's do one thing. You got, you know, it's the old thing. You have just one job. Do that.
Yeah, I mean, I could argue that may mess up some other things by doing that, but you could probably.
No, it's gonna mess up a lot of things. But that
shit's gonna hit the fan no matter what.
Yeah, but you still got to do that one thing. You still got to get rid of inflation, and he'll be helped by the recession. The supply chain things will eventually, over the 12 months, sort themselves out. 12, 15 months. I mean, that's what businessmen do. I mean, I remember, if you being a libertarian, you'll remember Harry Brown.
Of course.
And Harry was a good friend of mine. And he cost me my most expensive bottle of wine. He was running for, he was running for president, and there was a group of conservatives that were in the room, and they were going to auction off this nice bottle of wine. And people were bidding 50 and 75 and 100, and there was so much money in the room. I just look at him and says, "You guys are a bunch of cheapskates. Well, here's for Harriet's. Here's $1,000." And then they sold a bunch of. Then they sold some $1,000 bottles of wine, because, you know, it's like this is not a bottle of wine. This is Harry. But Harry was always on me about, you have got to trust entrepreneurs and businesses to do the right thing. They'll figure this out. That's what they do. And I mean, he was, you know, almost every meal, every time we were together, he would be saying, it's businesses that are the important thing. Production is the important thing.
Yeah, that's true.
And really, after a while,
politicians don't get in the way.
Yeah. Well, politicians are always going to get in the way, but you still have to figure out how to get around.
You said something earlier that I promised myself I would come back to. And that basically, you mentioned it with the truck drivers, and I was in Canada a couple of weeks ago. That is utterly disgraceful, to think that a presidential executive order could allow Trudeau, or whatever, a PM order, to freeze, I'll even go with the word confiscate, bank accounts and money they may have in crypto on exchanges that, again, they foolishly did not transfer to their own wallet, but we'll save that discussion for a different time. And now, and I know this is going to get me some hate email, you have the US and the EU basically doing that, threatening, well, not just threatening, doing it to, let's call it, oligarchs and citizens of Russia. I just think that's abysmal to think that. And when we eventually have central bank digital currencies, that's going to make it all the more easier for governments. You could probably tell I'm not the biggest fan of government, for them to basically have complete control. If they don't like what you say, look what they're doing now. And you think that can't potentially come here to the US? Oh, of course it could.
Well, I'm not going to bleed too much for Russian oligarchs. I feel sorry for the Russian people, but they're spoon-fed what they're told. They've been told for 6 to 9 months now that Ukraine's run by a bunch of neo-Nazis and they're killing Russians and it's genocide. We've got to go in and save our Russian speakers, and that's what they're told. And they're not allowed. There's no independent media. All the independent media has been shut down. It's a very sad situation. But the simple fact of the matter is there have to be rules. In the United States, we drive on the right-hand side of the road. If you drive on the left-hand side of the road, you're going to be tagged with a fine. You're going to get into a wreck. You're not allowed to own. You're not allowed to do that. There has to be a minimal rules-based order, and they're not. It's not really that complicated. There's not like there's 4,700 rules. There's maybe a dozen, and the United States hasn't been very good about. I mean, I hope we've gotten over the we're going to go liberate people and give them a democracy that they don't want a stage of our cycle. It's unfortunate the Russians have Putin. It's unfortunate what he's doing, but you can't just say, okay, well, we're going to let you do that. We're going to let you kill tens of thousands. I mean, it's going to be tens of thousands of Ukrainian citizens. If multiple tens of thousands, when they start shelling these big cities.
Right.
And I mean, like I said, there's non-precision. They hit a maternity hospital here a few days ago. Well, they weren't shooting in a maternity hospital. I guarantee you that Russian soldier, when he, when he pointed that artillery gun and dropped the thing in, he'd say, let's see if we can get a maternity hospital. And they're just lobbing weapons in. That's how random people get killed. You create a terroristic mindset. You make it difficult for people to figure out how to survive. We're already up to 2.5 million Ukrainian
refugees.
Refugees.
Yeah.
I don't know how many you go before you break Europe.
Yes. Exactly. I mean, I have probably some unique thoughts about this. I'm probably going to keep 90% of that to myself, although I probably hinted a little bit of it today. And in an interview I did on disaster prep for the super rich last week, that will be up on my YouTube platform shortly. You mentioned media. We have horrific media, highly conflicted on both sides. I'm willing to admit that. Here in the US, like, I don't know what to trust, which goes back to basically form your own opinion and think for yourself, as opposed to relying on others or sources that you just anchor down into your thoughts. And that applies to me as well. I'm not saying that it doesn't. John, what's the price of oil going to be by the end of this year?
No idea.
Do you think it'll be $200 a barrel?
We could see 200. But remember, we're seeing a lot of demand destruction. I mean, the higher oil goes, the less you demand of it. That's just the basic rule.
Very true.
So if it got to 200, it wouldn't be there very long. It's just like when it got to minus $40, it was there for like a nanosecond or something like that. It was.
Do you think that if it gets to 200, that Biden would do something and step in with subsidies?
How? What? How much? Where do you get the money?
They just print it. It's the government.
Well, they're not. That's the whole point. We're getting out of the printing mode.
We are?
Well,
I'm not so sure.
Well, I don't think you're going to get massive stimulus through this Congress, or better yet, through Manchin and Sinema, to be specific. I mean, today, Joe Manchin came out and said he's not going to support the crazy lady that they were going to put into the Federal Reserve that wants to force banks to use to lend to companies for climate change. I mean, like, no, that's not what bank regulation is about. And so, I mean, Manchin is kind of like as powerful as the other Joe down at the end of the street. So
yeah, and neither of them are probably as powerful as the organizations or people that run the Fed. But again, I can't help my little comments, John. I am a libertarian at heart and probably am very distrustful of kind of government and their engagement with that. If I asked you that about oil, I'm going to have to ask you a similar question. We didn't even bring it up yet. It didn't even come up once an hour and 2 minutes into our conversation. What's going to happen with gold?
Well, I've got gold in my portfolio. It's been rising over the decades that I've had it. I haven't added or subtracted to it. It's sitting there. So as a percentage, it stays about the same. But
yeah, that's a problem.
my gold to me is not an investment. I don't invest in gold. Gold is central bank insurance. I have my gold because if I ever need it, if I ever use it, something very, very bad has happened. Either I personally am up against the wall, or the country, the dollar is something's happened in the world. So I would prefer that gold go down, because that means things are getting better. Gold going up is not necessarily a good sign. So it's because to me, it's not an investment. It's going to sit there. It's going to be in that same vault 10 years from now, I hope. I may change vaults, but it will be in a vault somewhere.
There will be some people that will think, given the topic that we led with and dove pretty deeply for 30 or 40 minutes in, that it's a little inapplicable for me to be asking this question, but I will ask it. In times of crisis, also does create opportunity. From a family office perspective, that is an active allocator, where could they be looking to get alpha in their portfolios? I'm assuming you're going to mention some aspects of commodities, but tell me more.
Well, commodities are a little bit more difficult. But traditional things, I'm working on a very large real estate project. Just plain old commercial real estate. Universities taking half of it for medical school. I mean, it's a monster project. So it's a good investment. It's a good long-term investment. It'll pay, maybe double digits over time. Oil right now, if you can find the right small plays, private plays, not public companies. You want multiple fields, multiple partners, multiple oil. You know, if you're big enough, you can find that. Because I think you can use the tax sheltering that you get from the oil and the cash flow that you're going to get from it, so that, you know, you're basically have got your money back in a very short period of time, 12, 15 months. And after that, it's just cash flow. I'm not a big fan of markets today. When the market's down 40%, I want to be buying big cap dividends, guys that have grown their dividends every year for 20 years. There's a lot to be said for people that can grow their dividend year after year after year after year. I want a lot of my money is in biotech. I mean, my personal investment, I'm a big biotech fan, but it's because I study it and I'm have access to trades and deals. I mean, if any of the members of your association want to reach out and touch it, I'm easy to talk to. I'm easy to get to. We've got access to stuff, and which is what everybody needs. And I'm sure that, you know, most of your members, though, also have their own accesses. They're like, we've got access to everything. Well, that's why you have an association, so you could share your access.
That is true.
But which is, I think, one of the great values of having an association of family offices is you can share each other's crib notes.
That's probably the number one value, I would argue.
Yeah.
John, what's the best investment advice that you ever received?
Ooh. I don't know that I ever received it, but I believed it early on. That was going into business for myself. I mean, the real wealth creation in this country is by business people. I mean, the people in your associations, I would imagine there's very, very few of them made their money investing. They made their money through businesses, through maybe other people's money in real estate, but nonetheless,
or a hedge fund manager,
or a hedge fund manager or whatever.
2 and 20 is a great business model.
But at the simple, a hedge fund manager is a business.
Yes.
Okay, that's not investing. That's a business where you attract people to give you money, pay you money to run a business. I think I was sitting with some 3 young girls from Boston University, came here on spring break, and a couple of them wanted to meet with me. I mean, they're seniors at Boston, and I sat and talked with them, and 2 of them are clearly on a track to eventually get their own businesses. They're how do we get there? Where do we train with? Who do we get? And they'll be successful. They got the drive. They were, ready to go at it. That's how real money's made. Sometimes it's small amounts of real money. Sometimes it becomes very large. And there's no one formula to starting a business. Just find out what you can do and do it well.
Is farmland a hedge for inflation?
In some places and sometimes, and at what price? I mean, it's like asking, do you What do you think about real estate? Well, real estate where? I mean, it's farmland. If you can find the right price for it, yes. Maybe you don't want to think necessarily of farmland in the U.S. Maybe you want to think somewhere outside the country where it might be cheaper. There are major family offices, hedge fund managers, big groups that own tens of millions of acres in South America, doing something prosaic as soybeans and corn, and making 8-9% on their money, but it's very steady, boring agriculture. You can go into Uruguay, buy land that's not too expensive. If you've got a 20-year time frame, take that 1,000 acres, fill it up with eucalyptus trees, and those trees in 20 years will be ready to harvest. And it compounds very nicely if you've got 20 years to wait. So it just depends on your time frame and where you are.
John, that was one of the best answers I've ever received to that question, because when you look back at the history of it, we're under the assumption that, oh, whatever, this is a great inflation hedge. Let's bring up gold. And I'm like, yeah, like in 1974 it was. But if you just look at the math behind it, it really hasn't been a great inflation hedge, but we've been sold that bill of goods. And really, there is no one thing. Like you said, it depends so much on the timing, the supply and demand, luck, a variety of factors, location, time horizon. So that whole concept of inflation hedge, there's many things that have been an inflation hedge, and it does appear to rotate and go in and out all the time.
Well, I got lucky when I bought my gold in the early 2000s. It was sitting around $350, something like that, and I got a big chunk of money. I mean, relative to me, I mean, nothing, not that big a chunk, and I wish it had been bigger because I'd like to own, I like owning gold at 6x for what I paid for it, but it's sitting there, and my true desire is that I give it to my grandkids, my great grandkids someday, so they can play checkers with it, because it ceased to have a value because the world has gotten so good and things are so great we don't need gold.
Peter Schiff wouldn't like that comment, by the way.
Well, he might not, but I would to live, if we were dreaming, I'd like to live in a world we don't need, to be funding $700 billion military budgets. But we're a long way from there. That's just not.
Yeah, we are beyond a long way from there with all that we got going on.
Right now, you need some goals, though.
I didn't get into it. I can't say that I've researched. So the honest answer is I don't know your opinion. And if it is, hey, Angel, I just really haven't done a lot of diligence on it. I don't have an opinion. I've gotten Harry to turn just a little bit. Peter, I have no shot with. What do you think of Bitcoin, Ethereum, and crypto?
Don't think much of crypto. Big blockchain fan.
Okay.
I don't understand Bitcoin as a store of value. As you've heard the story about these are trading sardines. These aren't eating sardines.
Yes.
If you remember that story. Well, I mean, Bitcoin to me seems a little bit like a trading sardine.
But
do I have some crypto, Bitcoin, stuff like that in my portfolio? Yes, I have managers that I've given money to, and they invest in that stuff. And I'm investing in the manager, but they're not it's not a crypto fund. If it was a crypto fund, I wouldn't have put money into it. I have a manager that has a wide range of stuff that he can put money into, a couple of them, and that part of that wide range is they've got pieces in crypto, so that's fine. But crypto hasn't been a very good bet lately, so I don't know. Maybe it doubles between now and the end of the year.
It was a hell of a bet last year, but it's incredibly volatile. And no, I don't want to.
To me, I'm 72, going to be 73 this year. I prefer less vol, not more. Thank you.
Since we did discuss some degree of politics and global issues, why don't I not get in more trouble and get more shadow bans from YouTube? So are we trending here in the US? We hinted at it with government intrusion, with confiscation through taxation. Might we have an era coming up in 10 or 15 years where we have someone, speaking of Puerto Rico, and I'm allowed to say this, I'm half of Puerto Rican heritage. Could we have an AOC as president? Could you see taxes going to 70 or 80% for the super rich? And I know this sounds impossible, but we heard it come up this year, taxation on unrealized capital gains.
No. The progressive wing is, I think, of the Democratic Party is going to get increasingly isolated. If you look at the latest polls now among Latin voters, Republicans have a 9-point lead for the first time ever. Really? That's a sea change. They're by and large conservatives as a group. They're not rocking the boat. Living here in Puerto Rico has been very interesting to me, of how, almost non-confrontational everybody is here. It's a very laid back lifestyle with fireworks. Everybody, it's a cultural thing here. They love fireworks. You can, you're in a different country when you walk out of the grocery store and there's the display for fireworks and the display for higher end liquors right next to each other on the way out.
They got some great rum. Come on, John.
There is some great rum there. No, I don't see. There would have to be some massive change. We're getting ready to, and we'll start ending it here with this. I've been writing about the fourth turning now for 20 years. Neil Howe is a very, very close friend of mine. If you haven't read the book, you should.
Yep.
Because it's incredibly prescient. But he is writing right now. He's in Key West, holed up in, I'm sure it's a nice hotel. But he's writing a follow-up to the fourth turning, and saying, because here's where we are. I remember sitting with him and Newt Gingrich together in Italy. And we were talking, about the process. I says, where do we get to war? This was like 6-7 years ago. Where do we get to war, Neil? Because there's always a war. And then I've had that question with him a couple of years ago, because we get together a lot. He says, how do we get to a war? How does that happen? Because that's always been the fourth turning, the end of the fourth turning, you get those. And well, here we are.
I guess it's time for that.
It is the late 2020s. Is where Neil is focusing his 2026, that period of time, 27, 28, that's the end of the fourth turning. That's the real crisis period. and it seems to be ramping up. George Friedman wrote a book,
Right.
The Storm Before the Calm, where he's got an 80-year geopolitical cycle and a 50-year geopolitical cycle, and they both coincide at the end of the 20s. I mean, we're running into massive debt problems. We'll be well over $40 trillion when we get into of debt when we get into the mid 2020s, pushing 50 trillion by then.
Yep.
How does that work out? Well, one of the things it does is it makes you Japan. It's going to slow growth down. We're eventually it'll become deflationary. We're going to turn Japanese. And that's not something that people are going to be happy about, especially not as so many of them are retiring and are living on fixed incomes. So now, I think we have to reset everything at that point. We're going to have to rationalize all that debt. It won't be fun. It'll make a big difference who's in control, but I think it will be somewhat of a crisis. But if we get the reset done right, then the 30s will be a big boom again. I mean, we get it behind us. And because I'm a big fan of technology, I'm a big fan of progress. We could see by the end of this decade, early 30s, we could actually see age reversal. I mean, we're making more progress on a lot of fronts in biotechnology than people understand. There's some massive change getting ready to hit the agriculture markets and the way we grow and do seeds. I mean, there's enormous, wonderful, positive stuff that's happening. So, I mean, all of this negative, I still think that I'm the most optimistic person in the room. It's just governments I'm bearish about.
Oh, compared to me and Peter, there's no question. And you make me feel good about potentially, how some things could play out. I've interviewed so many thought leaders on this, David Hunter and others. I appear to like to torture myself and talk to economists, John. I don't know what it is. And then I usually am the more bearish one compared to them, but oh well. On that note, you've been very generous with your time. I'm sure my audience would love to learn more about how they could follow you on Twitter and how they could subscribe to your newsletter and any of your other services. How could they do that?
Well, my letter's free. Just Google John Mauldin, and it'll show up Mauldin Economics. My letter's thoughts from the front line. Just stick your name in, click on it. You can read the letter. We will give you multiple opportunities to stick your email address in, and then you're one of my 1 million closest friends. Twitter is easy. It's at John F. Mauldin, and you'll be one of my 47,600 closest friends.
And John has many more followers than I do on Twitter. And I highly recommend you follow him. Definitely sign up and subscribe to the services. And as you get more familiar with the services, as John's describing, I believe there also is some private opportunity, maybe for family offices and ultra high net worth investors on consulting or direct projects that you could connect with them on as well. Correct, John?
We do a lot. I actually do work with money managers and do referral business. I'm the world's smallest broker dealer, so I get referral fees and investment advisors and stuff like that. But I do have a Rolodex, and I do see deal flow. So for people interested in that, they're welcome to call me and come to Dorado, and we'll have dinner.
Well, that sounds great, John. And I'm actually looking to do an event this October, of course, during potential hurricane season at the Vanderbilt. If we could get you to drive about 45 minutes, would love to have 3 of my favorite economists on the island, maybe you, Peter, and Dent all together at once. My God, that sounds like it'll be a lot of fun.
Well, I like Harry. He is a lot of fun. Peter, we see each other a lot, so
maybe too much. That's the problem. Maybe
no. It's he's just down the street. He's a good guy. He's just wrong about his economics. Which is what he says about me too, by the way. So it's fair.
Probably so. Everyone, I'm Angelo Robles, host of the Angelo Robles podcast, the founder of Family Office Association, a global membership organization dedicated to investors and family offices. Go to familyofficeassociation.com to learn more. I'm very active in social media. We're Family Office on Twitter and YouTube, and I'm Angelo Robles Meta, as in Metaverse, on Instagram. Thank you all for joining us today. We hope you enjoyed John. He was a great guest. Look forward to having him back. And yes, I will be in Puerto Rico in October, and hopefully John could join what we're going to be doing at the Vanderbilt in Condado. John, thank you so much for your time today.
You're welcome.
My pleasure. Bye.